If you love our crypto content or are looking to learn even more about crypto, be sure to check out and subscribe to our new YouTube channel after this video dedicated to all things crypto. Find new videos every week. Be sure to check the link in the description.
Hello, Real Vision people. This is Sebastian Munjava, and today I have a very special guest, Gavin Wood. He is the founder of Parity, Polkadot, Web3 Foundation, and Ethereum. I am so glad to have you here, Gavin. How are you doing?
Hi, Sebastian. I'm doing well, thanks.
Let's start off with a little bit about your background, getting into crypto in the first place, and then maybe a little bit about your experience with Ethereum.
Sure. You want me to kick off?
Yeah. Tell us a little bit about yourself, your background, how you even got started in the space.
All right. Well, it's a long story. I went to university. I did like a PhD in computer science. I was always super into things like game theory, a little bit of like social science, political science. This was always kind of on the back burner, generally sort of pub conversations, but quite in-depth ones. I kind of noticed this thing called Bitcoin back in like 2011 or something, but I only actually sort of took a deep look at it into it in 2013. And around the same time, I was actually doing a startup with an old friend, software for lawyers, so to help lawyers do their author their contracts, dumb contracts, paper contracts. And towards the end of 2013, I got talking to a few people in the Bitcoin community in London quite regularly. One of the people I met was Vitalik, who had just done this like initial white paper for this thing called Ethereum. And I was kind of looking for a little gig on the side, so I said, "Yeah, sure, I'll code it up for you." Ethereum sort of took off quite a lot into 2014 and 15. So I was the initial CTO for Ethereum Foundation, and it was sort of basically down to me to make sure the thing actually launched, which it did happily, mid 2015.
The workhorse.
The workhorse, yeah, that's it, running around. And I left the foundation, the Ethereum Foundation, late 2015, and to do Ethcore, as it was called back then, a sort of private company operating within the Ethereum ecosystem. And that eventually became Parity when we branched out to things beyond Ethereum. We did our own Bitcoin client, and then eventually, 2016, I put forward this idea for Polkadot, which is the project that I'm still working on, that Parity is fairly wholly behind now. And it's this idea for basically a chain of chains, a blockchain of blockchains, protocol of protocols. So basically going a bit one layer down in the stack and seeing if we can sort of abstract and generalize over what we've built before with Ethereum and Bitcoin.
And so the overarching goal of Polkadot is to what is this for interoperability? What's the problem that it's solving?
I mean, there's a lot of angles on this question. It's a very interesting one because we are dealing with such sort of deep tech. But if you like, I think the one that gets to the crux of it for me is innovation. We are solving the problem of innovating fast. So the problem is that if you want to innovate, you want to build a new blockchain, you want to build new business logic, you have to do an awful lot of work to get a relatively small amount back. And what Polkadot does is it allows you to shortcut an awful lot of that work. It allows you to shortcut on an awful lot of the stuff that you have to do to build your own blockchain, but it also allows.
What we're showing you here on our YouTube channel is just the tip of the iceberg. No matter where you are in your financial journey, whether you're a beginner just looking to break into the market or a financial professional looking to up your game, Real Vision has something for everyone. Every day, our team of expert journalists provides in-depth analysis, written reports, access to live streams, and access to our community, The Exchange, where you can interact with people just like you from all over the world. For just $1, you can unlock all of this and more at realvision.com. Try our Essential tier. If you like what you see, it's only $20 a month thereafter. So click on the link in the description, go to realvision.com, and see what you think. We look forward to seeing you there.
does is it allows you to shortcut an awful lot of that work. It allows you to shortcut on an awful lot of the stuff that you have to do to build your own blockchain, but it also allows you to shortcut on things like building your own community. It allows you to shortcut on stuff like being able to utilize all of the various other bits that are going on in other blockchains. And it does this by sort of connecting, allowing you to connect to those other chains. And it also very crucially allows you to avoid having to build your own base, your own security base, right? So blockchains, this is very important. They have to provide their own security. Bitcoin famously has this mining algorithm. So it's, I don't know, it uses up the equivalent of, I don't know, some small country's energy simply in securing itself. And, you know, of course, the newer chains tend not to be proof of work. They tend to be proof of stake, so they're not using so much energy, but they are using up a lot of capital. A lot of capital allocation has to go into this proof of stake so that the chain actually is secure, because it's this capital that's securing it. And the problem is that if you've got many different proof of stake chains, each doing their own different thing, then that capital has to be divided between these chains to secure each of them, rather than being pulled together and having the whole capital base securing all of the chains. And that's really, you know, one of the key problems that Polkadot solves. It allows the same capital base to secure many different domain-specific blockchains.
And so, can you tell me a little bit more about, I guess, how they get this grouped together security? So, I hear this word, you know, parachains coming up often. Can you tell me a little bit about how that security is different? How it's getting its security from the main substrate? As opposed to how Ethereum works, In
essence, so there's two different things going on here. One of them, you can look at it as like Polkadot as a bunch of different blockchains, right? Independent blockchains doing their own thing. And then every now and again, every 6 seconds, as it turns out, these blockchains are allowed to send messages to each other. So there's a point during a sort of a period, an interval, in which they are allowed to communicate, but other than that, they're doing their own work. A little bit like, you know, your traditional idea of a sort of office worker. They spend an hour sort of doing their own thing, filling in forms, writing memos, all the rest of it, and then at the end of the hour, they might have some sort of communication. They might take a meeting or have a call or whatever. So it's like these blockchains, we call them parachains. They're kind of going off, doing their own work for 6 seconds, then coming back and sort of conferring with each other, exchanging messages and catching up. Now, how do they get security? How do they share security? Well, that essentially comes down to this one chain, the relay chain, we call it. It's the heart of Polkadot. And this chain has a bunch of validators. These validators, as I said before, they're bonded. So they've got this capital backing. And this capital can be lost if these guys misbehave. So they're sort of trusted in some sense of the word. They're kind of trusted. They're not really trusted. They're acting in their own self-interest, right? Because if they misbehave, they lose potentially quite a lot of money. Now these guys are split. There's about when Polkadot is like going fully, properly sort of expanded, when it's really going, probably in 6 months' time, there's going to be about 1,000 of these guys, right? And the idea is that we split them into 100 subgroups of 10. Yeah, and each subgroup, each of these 10 validators get randomly assigned to one of these chains, one of these parachains, of which we expect there to be probably about 100. And they make sure that the parachain's actually operating correctly, that no one's trying to do anything bad or malicious on the parachain. Basically, they make sure the system retains its integrity. And this gets swapped out every 6 seconds. And what that means is that even if you compromise one of these groups, it's very difficult to get a long run. It's basically impossible to get a long run of blocks, of 6 second blocks, in order to really make any kind of attack feasible.
So all of these, and like you said, there will be many of these over the next several months that are coming out, but they are, again, all getting their security from this central relay chain. And can you give me an example of what some of these parachains might be doing? And it can be anything, right? Can you go into a little bit of detail about like what is possible on these parachains?
Yeah, I mean, the great thing about parachains, the way that sort of I designed Polkadot back at the beginning was really to try and make it as general as possible. We do that in first lesson of computer science. We do that by making it as abstract as possible. So we're really trying to get rid of anything that's particularly concrete or particularly specific to a domain.
Is this more so than Ethereum? Because this is usually the comparisons are like, we've got Bitcoin, then we've got Ethereum, which made it a little bit more abstract. Is this even more abstract than Ethereum?
Can you go on a little bit more? Yeah. So I mean, I was there back in the day when we were trying to pitch Ethereum to the world, and it's fair to say that Ethereum is more general purpose than Bitcoin. Bitcoin has a relatively limited ability to be scripted. So you can attach some conditions, some sort of scripting conditions to the payments that you make in Bitcoin, but relatively few. With Ethereum, those conditions that you could make became substantially greater. A lot more flexible. You could do things like loops in them, which computer scientists will know sort of can give rise to Turing completeness. And this allows you to do all sorts of crazy, weird, and wonderful experiments on Ethereum. But it's a big issue with Ethereum. That's what's called gas. And gas is this idea that you're metering how much computation it's being done. Every single transaction is being metered. And what the metering means is that every single instruction, these instructions are very tiny little things like add these two numbers or look this thing up in memory. These instructions, each and every one of them being counted, being metered. And this metering is very, very expensive. And what that ultimately means is that running complex, sophisticated programs on Ethereum is extremely expensive. It works, don't get me wrong, but it's very expensive. You can see this already today with DeFi sort of slowly being throttled by the amount of costs associated with the gas prices. Now, what we do is we say, well, actually, this level of abstraction it's good, it's general purpose, but it's not the lowest level that we can go to, and we go to an even lower level. So within Polkadot, we don't have the notion of gas. We don't have the notion of accounts or account balances. We don't have any of these kind of ideas like Polkadot has Ether. Ethereum has Ether. And every computer program that you write and upload to Ethereum has to be associated with an account that holds Ether. And every time anyone uses that computer program, they have to have some Ether to pay Ethereum to run the program for them. That isn't the case in Polkadot. In Polkadot, it's very simple. The team behind the program uploads their program. They do it as a blockchain. So the program is actually a very large program. It contains all of the various business logic for an application, or potentially many different applications. And they upload this into Polkadot, and then they pay for that program, that blockchain, that parachain, to be there by virtue of this deposit of a leasing system. But once it's paid, it's done. And at that point, the users of this computer program never even have to know about Polkadot. They never have to know about the DOT token or anything to do with that kind of stuff. All they care about is basically what is the business logic of this chain.
Is this like so it's like lump sum sort of payment for a lease for a certain period of time, then they get as much accessibility to the computing as they need, right? So that's great. And
Precisely.
So can you tell me, maybe give a little compare and contrast of what the parachain and maybe the initial parachain offerings that I'm hearing about? It's like the way that they're kind of bootstrapping their security, sort of. Can you maybe give a comparison to the ICO things that happened on Ethereum, whereas in Ethereum, the ICOs were trying to raise capital, maybe to build out one of these projects, which is significantly different than what you're saying, is because some of these parachain offerings, I believe, if I'm correct here, is that they're trying to bootstrap this like payment that you're talking about for their lease, for them to be able to run this constantly. Can you maybe go in a little bit about the differences here?
Yeah, so I think we're trying to avoid that specific term, because it does tend to lead to misunderstandings with precisely what's happening. In reality, what's going on with so I mentioned leases. So there's this idea that we have a finite number of slots, probably around 100 once Polkadot's properly going, and parachains can occupy one of these slots when they run, right? So it's like maybe there's one of the interesting parachains called Acala. These guys are essentially trying to make a decentralized finance chain. It's got like Ethereum virtual machine compatibility, so people can easily upload their Ethereum programs into it, but it can also do all sorts of other things. It's got like a stable coin on it, all this kind of stuff. Now, if these guys want to take a slot, then they have to put down a lease. Like someone somewhere has to basically put down more DOT tokens than anybody else in the world is willing to deposit for this slot. Now, these DOT tokens don't go anywhere. They just kind of get locked, right? So they can't be transferred out, sold, or anything like that. But they don't go anywhere. They stay within the account of the leaser, right, of the person who's putting the DOT tokens down. And 6 months or whatever, when however long it takes before the lease expires, those tokens are eventually freed up, and yeah, so they don't go anywhere. No one's sort of like they're all 100% sort of stuck within the Polkadot system. They're not. There's no chance of them being slashed or sort of reduced in balance.
So as in opposition or in a difference to like the ICOs that we saw in like 2017, that there's no like swapping out. This is just to drive home your point more, that these tokens are just pretty much placed here, left alone. It's not like there's no, oh, hey, I'm giving you this and you're giving me that. It's sort of just I'm providing security, or saying, yeah, I think these people need the security. I think this is a good project for Polkadot, so I will push this here and lock it in there. Right.
Yeah, that's it. I mean, it's just a way of determining the value of one project against another, and the value is just measured by how many people are willing to lock up how many DOT tokens behind this project. But it's only locked up as long as the project's actually got an active parachain slot. As soon as the project loses their parachain slot, they find an alternative means of leasing such a slot. Then those tokens are freed up, and they get not returned, because that would imply that they left in the first place, but simply placed back under normal use of the owner. Now, what we call now, of course, Akala probably and various other parachain teams that are out there don't have those DOT tokens themselves. So what they want to be able to do is basically say to the various DOT token holders of the world, hey, put your DOT token, sponsor us with your DOT, with a deposit of your DOT tokens. Don't give them to us. Just put them behind our chain, our project, as long as it's a parachain. And we, maybe you do it for the good of your heart. Maybe you do it because you think this is a really worthwhile project. But maybe you do it because the project is going to offer you some sort of benefit. It might give you some sort of on-chain, receipt or record that sort of can be used in the future for some gain of some sort. Now, this we call a crowd loan, because it's basically like you're taking to the crowd and you're saying, look, please loan the system some of your tokens in order for us to be able to put forward our chain and get one of these slots and run on Polkadot. So it's got the key difference is that these tokens never leave the ownership of the crowd, right? The crowd members. They retain ownership. It's just that it sort of gets placed behind a parachain. And once it's placed behind that one parachain, it can't be used for other stuff like staking or other parachains, or obviously it can't be sent to any third party as well.
That's great. I would love to hear a bit about Kusama. Right. And so full disclosure, I own some Polkadot, I own some Kusama. But I think this is really interesting stuff, especially like, the Kusama Society stuff, I think is very interesting. I'd love if you can just give an overview of what in the world is Kusama? How does it relate to Polkadot and the ecosystem as a whole as well?
Sure. So Kusama is we call it a canary network, canary chain. So, you're familiar with test networks. This is the idea of basically a network that has no value. Bitcoin has a test network. There's a few others. And that just sort of sticks around in the background, usually software that's going to eventually be rolled out to the main net, the sort of main network of a cryptocurrency or blockchain, will be first rolled out to one of these test nets just to make sure it's doing roughly the right thing. But the problem with test nets are that they don't really, they can't be used to test the things that require some degree of a value signal. For example, governance, right? Governance, stakeholder voting, this kind of stakeholder participation. This kind of stuff is very, it's pointless to do on a test net, because who's going to be interested in voting on a network that has literally zero value? It doesn't make any sense. No one's going to dedicate their time to doing that. So what we do for Polkadot, because we really wanted to test this stuff, it's very, we're breaking new ground in terms of on-chain governance with Polkadot, and we really needed to test it before we launched, a multi-billion-dollar market cap network that's governed by an algorithm. So we introduced first Kusama, a very low-value network, but still a network that in principle has scarcity, and that, people have given value over time. So Kusama is there to make sure that our various algorithms, be they for governance, for sort of just new features, innovations, experiments that we think might be good but might not be good, they might not work out. These are all things that can be pushed onto Kusama to try it in the real world with real stake, albeit not as much stake perhaps as a one of the top sort of networks, but still enough stake to make it worthwhile for people to actually interact with, test out, and for us to see actually how it works with real people. Now, in addition to that, of course, Kusama is kind of a fast-moving, no promises, expect chaos, break it, kind of an attitude for a network, which is quite different to a lot of blockchains. A lot of blockchains really push for their stability, robustness, reliability, as Polkadot indeed does. So really, we wanted an alternative out there that's using the same kind of technology, but with a completely different mindset. And that's really what Kusama fulfills. It's like, if you've got an experiment, you want to try a social experiment, put it on Kusama. Don't put it on Polkadot. Polkadot's there for like the sort of production, industry capable sort of applications. Kusama is really there for interesting experimentations, particularly social experiments. The society is one of these social experiments. The idea is to say, well, we've got the idea of blockchain, where you've got these blocks, they're full of transactions. The next block references the previous block, and you're sort of building a ledger up from nothing. Out of these references, out of one thing referencing the previous thing. Can we do that? Can we make it more tangible? Because blocks are not very tangible. You try and explain this to my mother, she won't really know what you're talking about. Blocks? What, wooden blocks? So the society is what's called also the human blockchain. And this is the idea that you can make a blockchain out of people. But rather than these abstract blocks full of transactions, you've got literally human beings. And the human beings, as a new one is added onto the human blockchain, they reference an old one. And so we've kind of got this society. I think there's 50 members now, all around the world. Most of them don't know the others. And each of them have tattooed, crazily enough, onto their body a reference to another member of this society, and it's all public. You can sort of see the tattoos, and every now and again one is chosen at random, and they have to actually prove that they still have the tattoo, and they have to prove to the other members of the society that they did indeed get the tattoo, and so on. So it's really just a social experiment, but it's something that kind of using to show that blockchains actually can be used to make a fairly arbitrary difference into people's lives. And there's a few other bits that Kusama's doing. It's sort of quite heavily supportive of the art world. So there are a few projects that are sort of Kusama is funding within the art world to try and sort of bring a bit more knowledge about blockchain, a bit more awareness into circles that blockchain wouldn't otherwise get exposed to. And overall, it's like Kusama's treasury, it's on-chain governance, so it has a fairly substantially funded treasury now. And the on-chain governance can control this treasury, and Kusama is fairly active in using these funds to support various projects to bring about awareness and education.
Yeah, so a couple of things that are coming to mind as you're talking is one, can you talk to me maybe a little bit about, I'm not sure, maybe the cadence of so I was reading about like Moonbeam is working on a Kusama version, or they're going to launch a project on there. And and then they're going to do it on Polkadot as well. Maybe can you talk to me about like the process that you would imagine that a team looking to build the parachain, would they go to Kusama first and then they would go onto Polkadot? Or can you describe how you see this process?
Yeah, I mean, it's certainly one way of doing it. I wouldn't necessarily expect all teams to go first to a test. Like we always have a test net. That's what's running at the moment. So we call the test net Rococo, and it started just before Christmas, I think, and it's been accepting parachain teams to be brought on over the last week or two. So the first step is really sort of get your parachain working just on your little local computer. The next step is to get it onto Rococo. And we'd expect most teams to like Moonbeam to be deploying onto the Rococo testnet. Kusama, I think, is, they may also choose to do. It depends whether it makes sense to the team to have sort of two kind of valuable networks going. One as a parachain on Polkadot and the other as a parachain on Kusama. Could be that some teams don't need for their project, doesn't make sense to deploy onto Polkadot. Could be like a small project, maybe a social experiment. Maybe they don't have that much funding or they can't get that much backing. And they're perfectly happy with sort of being on Kusama. It could be that another team, just jump straight to Polkadot. They know that their stuff works. They've tested it locally, tested it on the Rococo testnet. They don't need to bother. That for them, maybe the security of Kusama isn't sufficient, or maybe just that the other parachains on Kusama are not going to give them a sufficient sort of value add for them to be connected into them. So instead, they just jump straight to Polkadot.
So related to this, the governance of these protocols, right? And I pretty much already know the answer to this question, but I want to ask it anyways. Who is in charge of Kusama? Who is governing Kusama? Is it Polkadot?
No. I mean, actually, the funny thing here is that if anything, it's the other way around. But no, there's about 19 people. I think it was 19 that are. It might be 17, one or the other, that are governing. That are in principle the council. The Kusama Council, and they don't have any actual real power, but they have some degree of sort of executive power. It's a little bit similar to the UK political system. If I don't know, some people might be familiar with it, but basically, you've any sort of legislation has to be still put through the sort of full chamber or the referendum, as it is in Kusama, as we call it. But the council, which are a little bit akin to the executive body, like the sort of government, are the ones that most of the time put forward the sort of things to be voted on. So it's like they say, yeah, we think this is a good idea. Please vote for it. And then it goes into the referendum to be kind of voted through. But the interesting thing here is, though, that Polkadot, as the dot tokens, there are, I think, we originally mentioned that we're going to be giving 10 million dot tokens sort of to Kusama one way or another. We hadn't decided back when we announced it like a year and a half ago. But the likelihood now is that we will literally be bestowing 10 million dot tokens under the control of the Kusama governance mechanism. So it'll be fully sort of decentralized. And so in reality, Kusama, or the Kusama governance mechanism, will have a voice in how Polkadot is run.
Yeah, and so and I because I've talked to other people about like this relationship between Kusama and Polkadot, and like because of this governance thing, that's like why I asked it, is that Kusama can become its own thing, right? And so one of the main differentiators, and maybe you can talk about this as well. I wanted to touch on treasury stuff too, but if you can touch on again the main differentiators, you can call it whatever you want, right? You can say, oh, this is a test net, or it's a whatever you want to call it, but in reality, it's governed by itself. Right, its holders, it's beholden only to itself. So it's evolving over time. This relationship can really be different later. And so can you tell me some of the key differences? Like one of the ones I know off the top of my head is like for decision making, or let's say unlocking of staked dot takes like 28 days or a month, right? And then unlocking of Kusama is like 7 days. So there's a significant difference in some of these things. Can you talk about like why those decisions are made, or what are the implications of some of these differences between Kusama and Polkadot?
Yeah, I mean, primarily Kusama is, it's this sort of live fast, die young kind of a network, in that it's, it's pushing the limits a little bit harder than Polkadot. It's giving up some of the potentially some of the robustness and reliability, but in exchange for the very latest technology, for the ability to change, for the ability to adapt a lot faster. And ultimately, these to a large degree are a trade-off. Now, you can sort of argue maybe they can add some cleverness and have both, very fast changeability and extremely high reliability. But I would say in general, it's a trade-off between the two. And Kusama is trading off the reliability. Other things that are like this, probably like the auction, so the parachain lease slots on Kusama are going to be probably 4 times shorter. So instead of 6 months, there'll be only 6 weeks. So this means there's going to be probably a lot more parachain churn. They'll come and go. There's the governance in general for Kusama has shorter term limits. I think the council is re-evaluated. Is it once a day still? I think it's still once a day. But in Polkadot, it will eventually become once a month. And in Kusama, it might eventually become once a week. But there's generally this kind of 4-to-1 ratio. So if in Polkadot it takes 4 months, in Kusama it only takes 1 month. It takes 4 days.
Much faster. Kusama is able to mobilize, add additional technology features, make decisions about governance and maybe treasury at 4 times the speed that Polkadot can, right? And so let's talk a little bit about treasury, which I think is like a really interesting thing. Dot Kusama, again, like whenever I talk to people, I say Dot Kusama, the Dot Kusama ecosystem. But so in this space, right? Talk to me a little bit about how the treasury works, or like because Dot does have like a little bit of inflation depending on how much is staked. Is that correct? And can you talk about like the decision making behind this? Like I assume that this is so that you can develop faster, make more, because I know Decred had worked on like a treasury system that's taking from some of the miners and stuff, and that helps develop and build a robust ecosystem. Can you talk to me a little bit about how the treasury works, how that they're getting funds for the treasury, and how they deploy that capital?
Sure. The funds come, actually they come from a few sources. So one of the sources that you already mentioned, this is the essentially the suboptimalities of the staking system. So what we do is, I don't want to get like too complicated, too deep down into the maths, but essentially we name an optimal amount of the total issuance of the DOT token to be staked. At the moment, it's 75%. So we say, right, we the governance of Polkadot, declare that we want 75% of the DOT tokens issued to be locked under the staking system. If it's any more or if it's any less, then we consider it suboptimal. Now, as part of the algorithm by which we sort of determine how much rewards each of the validators should get, each of the stakers should get, it turns out, happily enough, that at 75%, to sort of make 75% be the perfect number for everybody, it turns out that only at 75% do we need the maximum amount of rewards, of total cost to the network. Now we say, well, for the moment, it's 10%, right? So we say 10% per year is the inflation, right? So we inflate the token base by 10%, and that 10% we allocate to staking, to the staking rewards. But here's the thing: if there is anything other than 75% of tokens staked, then it means we're not going to use the whole 10%. We'll use less of it. That's just the way that the maths works out. And this means that what we do is we send the rest of it. We could just not use it. We could burn it. We could never inflate the token base by it. But instead, we take a more progressive, perhaps, approach, and we put it in the treasury, in the Polkadot treasury or the Kusama treasury. And once it's in the treasury, then it's open to being spent by the delegated council. So these 19 or 70, I can't remember, people in Kusama, and I think it's still 11 people in Polkadot. And these guys can basically, a majority vote from them can basically spend what's in the treasury. And this is all super in the open. It's all on chain. It's all, you can sort of go to chat rooms and see what's going on. There's forums and all the rest of it. Now, if for some reason the council choose not to spend it, or there's nothing good to spend it on, or whatever. So basically, if there's an overrun, if there's a treasury overrun, budget overrun for running a surplus, then we actually burn it. So we chuck it in the incinerator, and the DOT tokens just go out of the system. The issuance drops. So there is this kind of additional deflationary pressure. It's not just we inflate 10% per year regardless, but we inflate up to 10%. And if it turns out that the staking is suboptimal and the treasury can't spend the funds, then those tokens essentially never get issued. What's it being used for? I mean, there's a bunch of Kusama has quite a lot of crazy stuff that it's using it for. And actually, with Kusama, rather than it's got rather than just being about the Kusama network, it's also trying to raise, as I say, awareness in more general circles. So there's a few artistic endeavors going on with it within that are being funded, and there are fairly small bits of funding, but still being funded from Kusama. Polkadot does tend to be a bit more focused. Obviously, the Polkadot treasury is sort of has more notional sort of capital funding, owing to it being a sort of widely more valued network. But the sort of stuff it goes on is running infrastructure within the community. So one of the first funding things that Polkadot Treasury was used for was running a very sort of widely used blockchain explorer. So, a website where you can check the history of transactions, that sort of stuff. Also development, various projects have had their technology been funded by the Polkadot Treasury. And of course, this is all open source, so everyone can benefit from it. And there's a few other bits.
And so these people that are wanting to get funding, right? Let's say your example of a block explorer, this person would say, they would put in a proposal, right, to the Treasury to say, hey, I think I can add value to this network. Can I get some of this inflation or this Treasury funding? And then the group of people, the council, would be making a vote to say, yeah, we think that is worthwhile for us to use those Treasury funds to build out this infrastructure, right?
That's exactly right. Now, the interesting thing is there's actually three ways of that the Treasury can sort of be used. Three methods. One of them is precisely that. So it's like someone comes forward, they say, "Hey, I've got a proposal. Please give me some funds because I did this cool thing, or I want to do this cool thing." It's great for Polkadot. It's great for Kusama, and the council votes on it. Fine. There are two other ways. One of them is what we call the bounties. So this is the opposite way around. This is where the council says, we want this this thing doing, and we will pay this much, and we're delegating this curator to make sure that it's actually done, and that they basically are in charge of making sure that the funds are properly spent. But we want this goal achieving. Who out there would like to achieve it? So they kind of put out a sort of call to action, or a sort of a request for proposals sort of thing. And then the other thing is what we call on-chain tipping. So this is where basically someone has done something, usually a very small thing, but still something that's, it's a nice thing. It's like, maybe they've written a little blog post, or I don't know, done some nice pottery or something, somehow made more people aware of the network, or done some useful education or technology for it, and basically someone will report this as a sort of a nice little good thing, and they'll say, and then the council, rather than having a specific spending proposal, each of the members will say, yeah, I think this should be tipped 1.5 dots, right? And then as each of the council members fill in what they think it's worth, if it's worth a tip at all, what sort of tip it's worth, they'll eventually be a quorum of council members. Like I think it's usually half of them, maybe half plus one. And at that point, there's a countdown, and it's like 24 hours in case any other council members want to chime in and put what they think the tip should be. And then after that, it's just the median. And so the median tip is chosen, and it's given to to whoever reported it, or split between whoever reported it and whoever actually did it. And this really just allows a much faster moving process, rather than having to, well, I'm thinking of doing this blog post. I would like to be paid such and such for it,
Yeah.
and all the rest of it. It's just much faster.
So also with related to governance and treasury and stuff, I believe that there was this thing that I read about, like, Polkadot, Kusama, they're trying to be like forkless blockchains. Is that correct? And can you explain what that means and what the benefits are to that?
Yeah. So this is something that I personally worked on. It was sort of my little baby that I did when I started. I worked on 3 years ago now, but it was the first thing I worked on with regards to Polkadot. Essentially, Polkadot does things differently to almost every other protocol out there, including the very well-known ones. It's what's called a meta protocol, a blockchain meta protocol. What this means is that the protocol, the thing that people associate with Polkadot, so parachains and governance and balances and dot tokens and all that sort of stuff, that's not actually part of the underlying protocol. That's the underlying thing that runs on the network, right? That's actually a business logic that sits on top of the protocol, and it's entirely programmatic. What that means is it can be swapped out at any point in Polkadot's future for some other business logic alterations to it. The actual protocol, the thing that sort of is defined as being Polkadot and is very difficult to change, is actually very, very thin. It's all it is the sort of underlying consensus, which are called Babe and Grandpa. There's consensus, a hybrid consensus split to 2 bits, a bit similar to Ethereum 2's consensus, and sort of a fairly substantial move forward from all the existing consensus mechanisms. And a layer on top of that just says how to execute business logic. And we explicitly chose the most general industry, widespread industry adopted language, if you like, for that, called WebAssembly. It's backed by Google and Firefox and Microsoft and all the big ones. It's very well understood. It's got a lot of sort of big tech backing. It's simple. It's well designed. It's very highly performant, very efficient. Lots of good implementations. So it's got its big community around it. So basically, we just said, right, we don't need to invent our own thing. We're not going to reinvent EVM like the Ethereum virtual machine, like we did back in the day. This is going to be industry standard WebAssembly sorted. So we basically just plugged WebAssembly into the sort of blockchain consensus and a database and stuff. And that's what we call Substrate. Now, this is what Polkadot runs on. And all the stuff to do with Polkadot pretty much runs on top within this kind of WebAssembly thing. And that means we can switch it out. And what this means is that we can do upgrades to it without having to do these horrible hard forks where we're actually altering the underlying protocol. And because these hard forks are really messy, and if there's ever any disagreement over whether they should be done or not, it's like, oh no, I don't think this upgrade should happen. I don't think, maybe it's political. You're going to get like people disagreeing. Then you're going to end up with forks of the network. So you're going to end up with another Ethereum Classic or whatever.
Yeah, can you walk the audience through, like, well, what is a hard fork in general, and why do we want to avoid it? So maybe you can talk about Ethereum Classic, or just give an example so our audience understands, like, what is a hard fork? Why do we want to not do that?
Sure. So, I mean, basically, blockchains are consensus systems, right? So they exist as a way of allowing people, many different economic interests, often around the world and the different jurisdictions that may not be especially easily compatible. They allow all these economic actors to participate under the same economic rules. Now, this is a fundamental innovation. It's why people are so excited about blockchain, because it allows for this consensus to happen independently of any of the legal systems that exist in the world, any of the financial systems that exist in the world. But what happens if you need to agree something that isn't within this consensus, isn't within the scope of forming a consensus? Bitcoin, allows you to form a consensus over who was paid Bitcoin in the past and who to. But it doesn't allow you to form a consensus on how Bitcoin should be upgraded. That's not within the system of Bitcoin. The system of Bitcoin only considers account balances and whether a particular a transaction has been spent or not. Same with Ethereum. Ethereum is very good at sort of forming consensus over certain little computer programs, but it can't form a consensus over how Ethereum itself is going to adapt and change into the future. That's outside of the system. That's outside of the scope of Ethereum's consensus. The same is true basically for every blockchain out there, apart from Polkadot. With Polkadot, the entire system, the business logic of Polkadot itself, is contained within the Polkadot consensus. Now, if you don't have this, then you have to find another way of achieving consensus outside of the system, right? You have to find a way of all of the participants of the system, all the stakeholders, forming a consensus. Now, this might be done by having a benevolent dictator who just says, this is what we're doing. It might be done by having a vote and everyone committing to the outcome of that vote. But as we've seen in recent history, it's not always so easy to even agree upon the outcome of the vote, let alone get everyone to agree to committing to it in the first place. And what we end up with is the problem that Bitcoin and Ethereum have gone through in the past, where we see Bitcoin has forked off into Bitcoin Cash and Bitcoin Satoshi's Vision and Bitcoin Gold and Bitcoin Diamond and all the rest of the other little Bitcoins. And because this consensus there was no way of forming a consensus long term over how the protocol should be changed, should be adapted and evolved. And the same with Ethereum. There was a political decision to be made in Ethereum back in 2016 when there was this big hack, the DAO hack, whether the funds of the DAO that were hacked in the DAO hack should have been basically rescued and returned to the original owners or not. And this basically caused a split in the community. There were those that said, no, code is law. These funds must remain hacked. And there was the rest of the community said, no, actually, we should just try and fix things. It was early on and sort of made excuses. And these two different political viewpoints led to the two different blockchains that we now have, Ethereum and Ethereum Classic. Now, I think that the big issue is that these hard forks, there's always going to be contention and people will always make something sort of political about them. And because they're not governed by any kind of automated consensus mechanism, it means that we're sort of beholden to soft forms of consensus, humans interacting, and that's without any sort of authority governing them or any kind of economic system that they've all bought into, and that leads to these problems. And Polkadot explicitly avoids that by making the protocol part of the consensus.
So Polkadot, Kusama, it's more of alive. It's an alive protocol that has its own meta governance. Is that what, because it's governing its governance, or it has and so are there risks? Are there risks with this? Because I have heard previously, I've been in the space since 2013, and I've heard that, hard forks can be good because it's two communities doing what they want or how they want. Is there any concerns from having a forkless protocol?
It's not an argument without merit. I think there are good reasons to try lots of different things. However, schisms in a community are, as we've seen in the past, are toxic. They ultimately lead to negativity on every side. And that is generally against, sort of the happy innovation that we see in general in a sort of well-functioning community. So I accept and actually believe in running experiments, running multiple different potential ways forward at once, and then sort of competing them and somehow picking the best one and running with that. But it needs to be sort of under some sort of order. It's no good just having explosive, ways of trying multiple things, because there's no path to getting them back together again. And that's a big problem. Whereas how we actually Polkadot is one of the very first things that sort of came to mind with Polkadot, because it's a heterogeneous sharded multichain. So because it's got these different shards, these different parachains, and they can each be their own thing, right? They can each do their own individual thing. It's a little bit like a critique of the United States that I read in a few years ago in The Economist. So it's basically this idea of a federated system can run many different sort of policy experiments in each of the different states, and the ones that work can be elevated to federal status, and the ones that don't work can just be dropped. And it's sort of the same in Polkadot. We can actually do the best things of that are caused by hard forks, which is to say policy or protocol experiments, but we can do them at the level of parachains, and we can run them all in parallel, one in each parachain. And the ones that tend to work, we can elevate into Polkadot. The ones that don't work so well, we can just leave as parachains or drop altogether.
So to make sure I'm understanding this, you're saying that Polkadot acts sort of like a little bit like the federal government, whereas each of the parachains are being like the states, and they're getting like their meta governance. They have their own rules. So say this again. You said they're heterogeneous.
Heterogeneous, sharded, multi-chain, yeah.
So basically, again, this means as opposed to Ethereum, each of these projects building on top of Ethereum, that they are required to use the same blockchain logic as each other because they're uniform things. Whereas when we talk about parachains, they're not as uniform. They're just getting their security from this standard thing. They each have their own blockchain logic, their own rules, their own rule sets. They can just like the states have their own rules in deciding if this is legal or that's legal. That's one of the big differentiators between Polkadot and its heterogeneous shards, meaning that they have their own blockchain logic, and anything happening on Ethereum, that the projects happening on the coins built on Ethereum, they're still beholden to the same type of logic, right? And
that's it. Yeah.
Can you tell me the benefits of utilizing different logic or having the capability to use different logic? I'm just unsure about how much more expansive that world becomes by having the heterogeneous chains.
Sure. It's you can think of like a smart contract network like Ethereum, and there's a few others. They build in roughly the same architecture. A little bit like the civil law system of like the modern world. So you can get lawyers and they can make you up a contract. And this contract, can do lots of different things. I mean, if you talk to a lawyer, you can generally get them to basically write whatever you want in the contract. There will be certain statutory requirements that the overarching legal system places upon you, and it'll be different between legal systems. For example, companies law in the UK, it makes it very difficult to give different shareholder rights or restrict shareholder rights within a company. In the US, shareholder rights are a lot more. Certainly in some states, are a lot more flexible. You can basically kill all rights or give all of the rights to just a single shareholder or whatever. That's not the case in a lot of other countries. Now, that you can think of Ethereum's generality as being the kind of generality that you get within a particular jurisdiction over what kind of companies, what kind of civil law it has. It will exist within that jurisdiction, and it won't be able to call upon civil law in other jurisdictions. It will have the costs and the benefits of whatever the civil law is in that jurisdiction. What Polkadot gives you is the ability to have basically whole other jurisdictions. So you're not required to exist just under one particular country's legal system, jurisprudence, court system, lawyer framework. You can choose. You can make your own. You can say, actually, there's this blockchain is only going to have financial laws, and the laws are going to be extremely heavily regulated. And you might have another blockchain that says we have zero regulation. Now, Ethereum can't sort of, or the Ethereum architecture, I should say, can't really do this because it's beholden to the same underlying blockchain logic. It's a smart contract chain. It has particular definition of what gas is. It has a particular definition of like ether. It has a particular definition of how ether and gas interact. It has a particular definition of how smart contracts, these different computer programs, interact. And though each of these things cannot be changed, they're baked into Ethereum. And if you want to use Ethereum, you have to buy in to this legal system, this crypto legal system. With Polkadot, you can define your country however you want. You can define your laws however you want. You can define your economy however you want. You don't have to buy into any of this pre-existing stuff. And that leads to a huge amount more sort of experimentation that's possible. For example, If you don't want your users to have to hold your tokens in order to interact, but instead only provide a verified Facebook identity to be able to interact, let's say once or twice a day, you can do that. That's fine. You just write your blockchain logic so that instead of verifying that when a transaction comes in, it's from a particular account that has some tokens that you're going to deduct in order to pay for the transaction to execute, as Ethereum does, you check to make sure that the account is referencing something that's on Facebook, that the Facebook account is active, that it's been verified by Facebook or has a certain number of friends or whatever it is that you want, and that it hasn't made more than a few transactions already to do. That's entirely possible, and it opens up like a whole new way of designing your application's economics. To put it another way, you can implement Ethereum inside of Polkadot, right? You can make a parachain, and indeed there is a parachain, it's called Moonbeam, that is, to all intents and purposes, the same as Ethereum. You can't make a smart contract in Ethereum that does the same as Polkadot. You wouldn't be able to pay the gas costs. It would just be impossibly expensive. That's the sort of key difference. Polkadot exists sort of lower in the stack. Ethereum, we call it a layer 1 blockchain because it's like the sort of notionally the first, and you build layer 2 applications on top of it. But you can think of Polkadot as a layer 0 blockchain because it sits underneath the level of Ethereum. So things like Ethereum, like Moonbeam and Akala, build on top of Polkadot. And Polkadot sort of sits as a foundation layer that's just there to give security and interoperability between its constituent chains. It doesn't do anything more than that.
I've heard you say this before, and this is basically what you're talking about. But you said like Polkadot is a bet against maximalism. And that's kind of what you're touching on right now, is because you're saying like these different jurisdictions have different rules, but we're uncertain about what the best rule sets are, what the best jurisdictions are. So because of this, because we know we're not certain yet what the best rule set is, Polkadot allows you to experiment with all the rule sets. And so I don't know if you want to expand on that a little bit more about this idea of it's a bet against maximalism.
Yeah, I mean, there is definitely that thing that we don't know what the best one is. But I think even still, even if we did know what the best one is, I think there isn't really a best one. There's maybe a best one for a particular kind of application. There's maybe a best one for a particular industry or domain, but I don't think there's a best one, period. I think this idea that has been sold as like one blockchain for every application that, has been pushed certainly by elements of the Ethereum community. I don't think it exists. I think Ethereum is a great chain for prototyping sort of blockchain experiments on, but I definitely, if I were doing, like, for example, a supply chain infrastructure, then why would I build it in smart contracts that have to be metered, like that are these really inefficient metering systems? I know that I know what these contracts are. I know basically how long that they take to execute. Why am I, every time a user is using them, remeasuring how long it takes to execute? Now, of course, if there are many different contracts and you can't predict ahead of time which one is going to be used, and anyone could introduce any contract at any time, like a very general purpose, very sort of prototype heavy system, then of course metering is probably the only way that you're going to that can happen. But for so many domain specific applications, it's just not needed. It's too heavy duty. It's much better to actually make, surprise, surprise, a domain specific blockchain. Right? But the problem is with domain specific blockchains that their costs are time consuming to build, and because they exist only as a blockchain, they can't talk to other blockchains very easily, so they don't integrate well, and you can't compose them with each other very, very easily. So that's where Polkadot comes in, right? So it's like Substrate, which is our blockchain development toolkit, makes it super easy to build your own blockchain, and we're sort of seeing some great news articles about people building their own blockchains in various industries. The one that I read most recently was this Korean music publisher that's building a blockchain for Korean pop bands' non-fungible tokens.
Yeah.
Brilliant, lovely. But yeah, we're seeing these domain-specific blockchains come out because they're just so much more efficient, more performant than doing things in a general purpose environment. And then, of course, Polkadot allows these domain-specific blockchains to be deployed into Polkadot and talk to each other and share the security together. Very important, so that you don't have to pay your own validators or otherwise have a very centralized proof of authority. So this is where the sort of really interesting performance benefits come from. It's not just about parallelizing all of it, which is already great because we've got, for one Polkadot relay chain, now 100 different blockchains, each whirring away, processing transactions all at the same time. But each of these chains, each of these shards is domain specific. So it's optimized to be highly performant for its specific use case. Now, this is something that you don't get in a typical homogeneous sharded system like Ethereum 2, where each of the shards, although there might be 64 of them or whatever, but they're each doing the same thing. They're each general purpose. And that means that none of them are going to be very performant for any of the tasks that they're doing.
I see. Yeah. No, very interesting stuff. I'd love to hear about your thoughts on what's happening in the space, in Polkadot, Kusama specifically, over the next, let's say, year or so. What are you anticipating? What are you had touched on the launching of these parachains. Is that supposed to be happening soon? Tell me a little bit about the future of Polkadot, Kusama.
Yeah, right. So I mentioned Rococo, the testnet for parachains has been launched in the last month, and we're slowly onboarding each of the parachain teams. I think we have about 15 of them or so, 15 or 20 that have already got their stuff together, their software, their parachain, and they're ready to put it onto the testnet, onto Rococo. Once we're happy that code is running reasonably smoothly, then we will roll it out onto Kusama, alongside, of course, the Kusama auctions. So these slot auctions and the crowd loaning system, so that people across the Kusama stakeholding ecosystem can back their favorite parachains and maybe reap some of the rewards that the parachain teams are offering them for their backing. So that's probably coming in the next month or two. Once we're happy that Kusama has everything's working as we expect in Kusama, and once the external audit is completed, we have an external audit firm on retainer that's just basically churning through all of this new code as we develop it. Once they're happy that this is safe and secure, then we will be deploying it onto Polkadot. Our tentative goal for that is by the end of this quarter. So fingers crossed that comes through. Once that is done, there will be an initial version of XCMP, this cross-chain message passing protocol. So this is the way that these parachains can send messages to each other, communicate. As I mentioned, like every 6 seconds, they can sort of send messages. And that will be also within this first scope of delivery at the end of Q1, hopefully. And then over this first half of the year, we'll be optimizing this XCMP into a more or less off-chain version of it, which basically dramatically increases the efficiency, increases the number of messages that they can send to each other, decreases any of the costs associated with it, and so on. There are a few additional technologies. One of them is called Spree. This is a very exciting technology. It stands for Secure Protected Runtime Execution Enclaves. And what it basically means is that you can have little programs that run inside these parachains, and they're all run separately, right? So they all run with the parachain in parallel to each other. So like you can imagine 100 copies of this program all running within the scope of the parachain, but it's the same program. So it's sort of like the best of both worlds. You get heterogeneous, domain-specific, industry-specific blockchain sharding, but you also get a little bit of the computer program in the shard that is the same across all the shards. So it can do things like handle token balances, and it can send things like tokens or assets between the shards with a guarantee that the code on the other side of the message is going to execute correctly, execute as you imagine. So in token, very simple execution. Reduce the balance of one account, increase the balance of another account by the same amount. Very simple sort of transfer operation. But we can imagine there might be a few more of these different little snippets of code that have their own protected storage associated with them, so they can maintain the balances. And this is very important so that parachains that don't trust each other's logic, They might trust that whatever their logic is executed correctly by Polkadot because they all run under the same validator umbrella, but they don't necessarily trust that the logic itself is doing what they expect it to do. That when they send hey, transfer this asset, please, that it's actually going to reduce the balance of one account and increase of another. Now, what Spree does is it gives them that guarantee. It allows the best of both worlds, both your homogeneous sharding and your heterogeneous sharding.
And we expect that in the near future. When do you expect the Spree to come?
That I expect to land. Finger in the air. Q3, I would say probably Q3 this year.
And so, do you imagine that most of the fruits of your labor will be going by the end of this year, right? Like, so you're saying the Spree thing, you're talking about all of these parachains. I mean, do you expect to see DeFi basically existing on Polkadot by the end of the year?
Yeah, I would hope so. I mean, there's already plenty of DeFi chains, and we've got some amazing teams, some really great talent out there developing parachains. The great thing is that, I mean, for me, it's out of my hands. Our job here is to develop Polkadot and deliver parachains and make it as efficient and stable as possible. It might be that when that's done, that we sort of start playing around and developing a few parachains of our own and maybe developing some of the core technology of parachains. But basically, our job is to deliver Polkadot and as an application platform. And it's our wonderful ecosystem of, I don't know, I think I last read about 340 projects and counting that are developing the layer ones, right? These platforms. So Polkadot's a platform of platforms.
Yeah,
are platforms themselves that are providing, the infrastructure for doing things like decentralized finance and supply chain and registry tracking and NFTs and all this crazily imagined stuff that's going to sort of some of which is going to be really world changing. And so it's great, and I have a huge amount of confidence in many of these teams.
Perfect. Well, thank you so much. Do you have any final thoughts? Any last things you'd like to say to the audience about Polkadot or how you see the future, or the ecosystem in general?
I think we're sort of in an interesting time for the ecosystem, particularly with Polkadot. I mean, obviously, most of my time and efforts have been focused on Polkadot. It's rare that I actually get a chance to look up and look around and see what the rest of the world is doing, and that's even more so in the last year with no conferences and all the rest of it. But I do think it's really a great time to be in this ecosystem. I think we are sort of entering blockchain 3.0 slowly but surely. And I think it's important to look behind the claims to work out where the sort of true actors in this golden age are. And who are the sort of maybe the ones that didn't quite make it into blockchain 3.0 and are still at 2.5? Because I think on the face of it, it's not always so easy to distinguish. So it's really important to, if you're trying to make any kind of judgment and evaluation, it's really important to get a proper sort of developer-led technical evaluation of where the protocol's at, and maybe also a sort of proper game theoretic evaluation of what the protocol does, and not buy too much into a lot of this sort of hype surrounding it. And the only other thing I'd say is, be aware of the distinction, the difference between evolution and revolution. I know, as having done Ethereum, we brought a sort of new kind of architecture into the world with Ethereum, this idea of the Ethereum virtual machine, the idea of smart contracts. Proud as I am about that, it is ultimately it's technology that's now 6-7 years old, and we're still seeing blockchains sticking to that architecture, sticking to this, very sort of smart contract, gas consuming, dynamically metered architecture that we introduced in Ethereum way back then. So that's all very well, and you will see evolution on that. You will see people improving performance. You will see some changes to things like transaction propagation, just trying to eke out that sort of improved level of transaction transaction throughput. But ultimately, if it's using the same architecture, it's probably not going to be a revolutionary difference in a revolutionary innovation. And you've got to look beyond that architecture to really find the gems in this golden age.
Great. Hey, thank you so much. I really appreciate it. Great advice, great knowledge. Thank you so much, Gavin Wood.
Thanks for having me on the show.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.